Welcome back to Cheddar, everyone. We got to talk this July jobs report, a much stronger than expected July jobs report, setting markets to new records this afternoon. Non-farm payrolls increasing by 943,000 and the unemployment rate ticking down to 5.4%. Of course, the wild card for future hiring is this highly contagious Delta variant. Well, joining me now is Bill Rodgers, Vice President and Director of the Institute for Economic Equity at the Federal Reserve Bank of St. Louis. Thank you so much, Bill, for joining the show this afternoon. So, a very strong report. What is your takeaway? Are we heading in the right direction?
Most definitely. This is the second consecutive month that we've had job growth, almost close to to a million. The other good news in this report was that there were revisions to the previous months, which added additional job growth. We've also saw the employment population ratio, that is the share of the civilian population that's got a job. We saw that tick up nicely. Why am I focused on that? Well, the unemployment rate is a quality measure, but in this time where there are a lot of people who've made decisions to opt out of being in the labor force or looking for a job, I like to settle on that employment population ratio. So the bottom line was we saw an improvement there, strong, robust job creation, and also a little more than a third of the total non-farm payroll increase was due to the leisure and hospitality, an area that had been really hit hard by the pandemic.
And Bill, it's good to see those gains. We know that sector, I think, still millions of jobs shy of where it was pre-pandemic. Biggest gains for that sector in this last month of July, but probably still the most volatile sector. I think the big worry that people the big worry is that this Delta variant could lead to further shutdowns and restrictions, and people might curb their spending. Based on what we know now, what is your prediction for the August jobs report, for the jobs growth that we're going to see this month and into September?
Yeah, I'm not a forecaster, so I, am hesitant to, kind of give you a number. I think if we continue to make the right decisions in terms of getting people vaccinated all throughout the United States, my district, the 8th district, encompasses Missouri and Arkansas. These are two states that have lower vaccination rates, and we need to make that economic case, the business case, and the household health case to these families and all families that our recovery really hinges upon people getting vaccinated, and also doing these other safety measures, wearing a mask, social distancing, and also just taking good care of yourself, right? Getting outside, enjoying the summer sun.
Yeah, taking a walk, I think probably maybe one of the better things that we can do during this time of year outside. Bill, let me ask you this. It was not too long ago that we heard from Fed Chair Jerome Powell, just last week, in fact, and he did reference, following the Fed decision, that we're still seeing an uneven recovery, that African-American employment is not picking up at the same rate as white employment. So from an equity perspective and an inclusion perspective, where do we stand, and how do we make progress?
Well, you raise a great question, great question, or a great set of points. And our institute is all about focusing on, right, the structural challenges that not only African Americans face, but Latino face, but even all low-income families, particularly those families or communities that are having difficulty, generating or benefiting from economic expansion, economic recovery. And so, this government, the federal level, has done some really good things in terms of the ARP money. Those dollars are going out to communities, and communities have opportunities to figure out how to spend those dollars to address and create a prosperity that is not just temporary but long-lasting. There are other policies that are being talked about too, such as raising the minimum wage, such as continuing the child care tax credit. That that credit extension has elevated a large number of families out of poverty. And then you have also issues around housing security, conversations around extending the moratorium of eviction. So there's no single set of policies that can provide relief, recovery, and reimagining how we can have prosperity, how we can have equity. We have to really invest in all of these approaches.
Mm-hmm. Bill, let me ask you this. Average hourly earnings up 4% in July from the same time a year ago. What does that number mean? And is that encouraging at all as we try to get to a more equitable workforce?
It's most definitely, I think, encouraging, particularly because the increase, particularly this month, is not an acceleration from the last month, which is where you would start to see, I think, people's expectations about future price increases, future wage increases would start to emerge. Right now, I think the consensus is still that the inflation, the cost of living that we're seeing increases are going to be more temporary, and that they will subside. So as long as expectations don't start to change about future price and wage increases, I think we're in good shape. This is just the nature of a tight economy, or a relatively tight economy. We still do have a slack there. If I add up the number of people who are unemployed, who are actively searching for a job, those who are working part-time but want to work full-time, and those who are stopped searching but want a job, that's about 15 million Americans. And you compare that to the 8 to 9 million job openings that are out there, that suggests that there still is some slack. Also, yes, the unemployment rates for minorities and women, particularly minorities, have been cut in half, more than a half. But if you look at that employment population ratio, that share of the civilian population that has a job, it still is below what it was prior to the pandemic. Mm-hmm. So the economy's tight, labor market's tight, but we still have a ways to go. We still have another 6 million jobs that need to be recovered from the pandemic.
Still a ways to go, Bill. Great to get your take. I hope you'll come on the show again. That's Bill Rodgers. He's the Vice President and Director of the Institute for Economic Equity at the Federal Reserve Bank of St. Louis.